For the DAX, despite signs of economic slowdown and potential recession risks in Germany, the DAX remains bullish, supported by expectations of rate cuts from the European Central Bank. Technical indicators suggest potential for a breakout to record highs. However, weaker industrial output highlights underlying macroeconomic concerns. The Nikkei has surged to multi-decade highs, bolstered by a weaker yen and a robust corporate earnings. Japanese stocks are benefiting from the Bank of Japan's continued accommodative monetary policy, which maintains low borrowing costs. A focus on structural reforms and shareholder returns also adds to its long-term appeal. G'day folks, welcome back to another update, and today we're looking at the German DAX and the Japanese Nikkei. First, looking at the Nikkei here on the trend analysis, so on the monthly, the weekly and the daily. First off, on the monthly, do note that the CCI 150 is broken below the moving average range. That's a bearish outlook on the monthly, even though the price is still potentially moving higher. You can see there it's been consolidating in there for a few months now. On the weekly, likewise, it's bearish, although it's making a bit of an upturn this week. Now, if I zoom out on this one, you'll notice here longer term we've got a bearish divergence, lower highs on the CCI versus higher highs on the price, and that actually broke down, hit our minimum target level. And that minimum target, again for those new to the channel, is basically we take that Fibonacci back before that divergence started, back to that significant low, and that's a 23-38% retrace, and that's our minimum target. Of course, sometimes it can break a lot further, and often what it does, it just more than 90% of the time it hits this, and then it usually bounces from there. But in this case, it's done that. But do notice as well the CCI is still dropping, so that's a weakening sign on the weekly at least. On the daily, it actually hit this key resistance up here at 42,500, and it's been consolidating in this minor support resistance range now for a number of days, and it's actually broken through that minor resistance area at 38,836 today, as we discuss, and you can see the CCI broken above its moving average range. Now it's a very narrow moving average range, so this could always turn down a lot quicker than normal, but we only trade in the direction of the, if you're trading on the intraday, we trade in the direction of the daily, as in this case. So if we go to the intraday chart, so again looking at the daily, we're trading long only. You can see here more closely on the 1 hour chart, and again you can apply this to any time frame on the intraday, the 2 hour, 15 minute, etc. We're just using the 1 hour as an example, but here you can see it's actually been moving higher, and you would have taken long entries so long as that CCI on the daily is bullish. So you would have taken a long entry there. Now I prefer to close it out when it touches the moving average band of the CCI at that point there. So you would have got out, you could have closed the trade on that candle there, and that was near the top of that range, and then re-enter it once it broke above. So an hour or two later you would have re-entered it, fell off a bit, but notice it's still a color coded the background, giving us a bullish signal, so it's still green, still holding on to it, and you'd still be in a trade today. And again, just watch it and wait for that CCI to come back and enter into that moving average range. So for the German DAX, first off on the trends on the monthly, you can see that it's very strongly bullish on the CCI and also new highs on the price chart. Now again, notice here we've got a bearish divergence, very long-term bearish divergence. It started back in 2015 or 2015 March, and it's been declining since. Now it's made a bit of a recovery since that would have been the start of 2023. Made a nice strong recovery since then, and at the moment that's actually broken slightly higher, but that's still a bearish divergence. So again, a very long-term bearish divergence, so just be mindful of that if you're trading this to go long. Now on the weekly, we've had a few other bearish divergence here that I've highlighted. That one there hit its target, that's 23-38% level between that Fibonacci range. Then it bounced out of there. And at the moment we've got another bearish divergence currently in place. If I stretch that out to there, you can see lower highs on the CCI versus higher highs on the price. So again, I've drawn a target range there, but that's now going to be readjusted. I'll delete that. So once we start seeing a decline, then I'll draw another Fibonacci range from that high, going back to that significant low back there. So at the moment, although we're making new highs on the price, the CCI on the weekly is showing a bearish movement, so just be careful of that one. On the daily, now this has broken through this previous resistance we had at 19,668, so I'm going to move that to that new level. And the reason I'm showing you that there is a resistance, we might see a potential pullback from there, even though the daily is showing bullish movement at the moment, both on the CCI and the price, although that's a key resistance up there at 19,950. And the reason I'm showing you that there is, if we go to the intraday chart, Again, we take long trades only, but you can see there we've got a pretty bit of a slight bearish movement on the CCI. You can see there the price weakening as well. So that could be a start of a bit of a downturn. So just be careful of that. Don't go long until we see this break above the moving average of the CCI. So you go take long trades only. Don't take short trades. Go take long trades only in alignment with the daily. So if that breaks above the moving average, and especially by then it would have broken above this resistance, go long again. What else can we see? There's no other bearish or bullish divergence to talk about. We did have a small, on the daily, we did have a small bullish divergence back here versus lower lows on the price, and the price bounced out of that quite strongly. Sometimes these very, very narrow divergences have more volatile action compared to the longer term ones, so just be aware of that. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.